memo on his, a memo, I do have a recording, a memo on Lawrence's behalf. So on behalf of Lawrence, he wanted to ensure that we are all grounded in the systems-based thinking. Namely, if we do not address the consciousness side of the equation of capital, we will continue to do things like greenwashing, consciously or unconsciously. And by having our esteemed guests here today to discuss this malady, our hope is that we'll bring light to a symptom of behavior that needs to be addressed. So again, Lawrence sends his best to everyone. And no further delay, Mark, I'm going to pass it right over to you.
Thank you, Heather. Appreciate it. Thanks, everybody, for joining this morning. I don't want to spend a lot of time on preamble. I do just briefly want to say that Future Capital is about looking at the system of capitalism as something that's neither good nor bad. It's a tool, it's a system that's available to us to use in the world. And what we are trying to do is explore how to use capitalism in a more sustainable, more regenerative, more inclusive way. And the conversation we're having today is a part of that particular discussion. I want to come to Steve to do a little bit of scene setting in a moment, but I'd like to ask, rather than reading their bios, is for Erica and Sarah to each just a minute to introduce themselves and their companies, so you can kind of get a sense of who's in the room with us, and then we'll dig in. So Erica, if you could begin.
Sure. So I'm Erica Karp. I am Executive Managing Director and Chief Impact Officer at Pathstone. Prior to Pathstone, I founded a company called the Cornerstone Capital Group, and that was about 7-8 years ago. And now we have merged with Pathstone. I spent about 25 years between UBS and Credit Suisse on the equity side of the business. More recently, before Cornerstone, I was director of global research, and that's where I learned organically how to integrate material, environmental, social, and governance factors into the investment process, making it not about ideology or policy or divisiveness, but about enhanced analytics and pragmatism. So the field of ESG analysis is a wonderful place for me to be. And at Pathstone, we advise families and foundations, about 30 billion in assets under management. And we're going to do our best to help our clients align their values and their money.
Excellent. Thank you, Erica. Sarah.
It's a pleasure to be here with you and to meet you, Erica. And thanks to Patty Clower and Steve for inviting me to this today. I am the founder of SVT Group, which is an impact management advisory firm. We've been celebrating this summer our 20th anniversary and reflecting on how the field has and has not changed and what's next. So this is kind of a fun topic apropos of that line of thinking. So my background is that I started in social entrepreneurship, working in youth serving programs after school in the inner city of Chicago, and before that in Mississippi in the Delta. And what was apparent in the context that I was working in social enterprise is that there's a lot of power to blending a business metabolism with a social purpose, in the sense that we are thinking about how do we create more potential and realize people's potential, even if they start from a not level playing field. They start with a lot of disadvantage. How can we help people realize their full potential? There's something important about the business context where there's a market exchange of value happening. There's a test of whether what you're creating is valued by the person you're creating it for. And the test of that is whether they'll pay you or not. And in that sort of entrepreneurial context, those lessons are as clear as they can ever be. And when you have a social purpose, part of the test is, are people better off because of what you're doing in terms of their human potential? But the funders of those kinds of organizations 20 years ago when I got started, or 25, really did not have any way of gauging meaningfully what kind of social value was being created, they tended to want to count something that was easy to count, like how many kids are walking in the door of the program. And they did not associate what it actually costs to run the program or what particular skills are needed to run a particular enterprise to create social value. So it was just a very not effective, inefficient, and often there were conflicts of interest, frankly, where people were getting a tax write-off for doing something in the name of social good, where the way they were structuring the money was actually preventing solutions from growing and being sustained. And that is what drove me to try to figure out, how do we do a better job of accounting for social value, and how do we integrate that into the way deals are structured and managed and funded. And that is, those issues cut across the social enterprise, nonprofit arena, but certainly all across all of private sector business activity. So I'll leave it at that for now.
That's wonderful. So we clearly have the right people on stage here. And let's bring in our last contributor. Steve Sheath and I are actually in the same town, in the same building, in different rooms because of the strictures of Zoom. Steve and I have had a chance to interact in a number of different capacities over a number of years in the industry, and now we get to serve on the executive committee of the Future Capital Initiative together. So always tremendous to just talk to him informally, and that was what gave birth to this discussion around the nature and the possibilities that greenwashing presents. So what I'd actually like to do is start by asking Steve to do a little bit of scene setting for us of what got us to this point, from the first awakening of companies that, hey, that this green or this sustainable thing is something that we should be thinking about and something that we should be public about. And of course, the natural afterbirth, which was greenwashing. So Steve, let me pass it to you for a few minutes and then we'll dig into some questions. Steve, we can't hear you. Muted. There we go.
Thank you, Mark. Welcome, Erica and Sarah. This is a great pleasure to just have this conversation with you. It would be awesome if we were all in the same room, but only Mark and I get to have that pleasure this morning. So I'm going to actually start with a little bit of my history, in the sense that I walked into a very shallow pool of early adapter minnows in this space 32 years ago. I embraced, those of us that were in that shallow pool, embraced this radical notion that investors could do good and do well at the same time. Invest and achieve financial goals, but also direct money in a manner that could help create a better world, and have a positive impact on the world. And for a very long time, that was heresy, certainly to Wall Street. And the language, of course, and the approach and the research and the data, have all evolved and grown and improved dramatically over the years. We went from, using the SRI terminology, which then was an acronym for socially responsible investing, to SRI, sustainable and responsible investing, to SRI, sustainable responsible impact investing, to just responsible investing, which is what the United Nations embraced in 2005, when Kofi Annan pulled together the international group of experts and created the principles for responsible investing, which were promulgated in 2006 and created the language that's now predominant, which is the ESG language. ESG is an acronym for environment, social governance, and in a very simple, oversimplified way, what this group did in 2006 was take all of what we used to call social criteria and kind of categorize them under 3 column headings. If you think about a piece of paper where you have the word environment, social, and governance as column headings, and then you have a group of perhaps dozens of factors that fall under this. That's essentially what happened in terms of the reorganization in 2006. And since then, the data that's been collected and the information that has been made available to investors and to companies has changed the world, has certainly changed the world of investing. And today, ESG is hot, hot, hot. There's so much information out there. I'm just going to throw a few factoids at you. The US SIF, which is the United States-based nonprofit for our industry, if you will, did their most recent trend survey and published in 2020 that there's $17 trillion in US professionally managed assets in the US, 1/3 of professionally managed assets in the US. At a global level, P&I recently reported that there was $40 trillion. Now, these are massive numbers, and it actually speaks a bit to the conversation we're going to have, the debate we're going to have today about greenwashing, because how much of that is real and how much of that is greenwashing is one of the questions, that we want to try to unpack today. But the fact of the matter is that if you look at just mutual funds, from a Morningstar perspective, the inflows into what are now called ESG funds, those funds that incorporate or integrate environment, social, and governance factor analysis into the investment process, is huge. And we're taking market share away daily from what many of us have considered to be kind of the conventional approach to investing. And because of all of this, because of the growing investor interest, there's growing corporate interest. The companies that we're investing in are much more interested now in getting good scores from the companies like MSCI and Sustainalytics and others that are doing the ESG research. And now we've got the assurance process happening. In other words, you have groups like, Deloitte Touche and groups like that are helping companies get better at managing and communicating around their ESG issues, more importantly, their ESG. As you look at the landscape, almost everywhere you look, this ESG or responsible or sustainable or positively impactful investing is now kind of the predominant thing. It wasn't very long ago when most of the articles published, most of the conversations like this were poo-pooing the idea. Today, it's very different. And because of that, we've got some folks that are kind of overstepping or overstating their strength. One of the things, having been in this for a long time, one of the things that amazes me the most is literally on a weekly basis, a new company appears on my radar, an investment company that's got billions of dollars in assets under management that says, we've been doing this for 25 years. When in fact, most of those companies a decade ago would have said, this is nuts. So, we have all I'm trying to do is to paint a backdrop for the conversation that we're going to be having now with Erica and Sarah, because there's many ways to look at this. Certainly there's an investor perspective and a company perspective. There's also let's call it a positive perspective, which would suggest that if you're greenwashing, perhaps you're paving the way to becoming green or greener. The negative perspective is if you're greenwashing, you're just trying to bullshit, the public and attract assets or attract business, and you don't deserve it. And so, where do we come down? And I guess I'm going to make a prediction right now and say that I'm not sure we're going to be able to tell anybody definitively what's right or wrong, good or bad here, but rather we're going to help people understand the different perspectives and perhaps questions to ask and perhaps ways to synthesize some of the info that we're all being deluged with. So back to you, Mark, to put this back on track.
Great, I appreciate that, and I think that that gave us a good launching pad here. So I want to start with intentionality, because I think that's where this all begins. Is, what is the motivation for why people or enterprises are doing this? And so my first question is greenwashing is it an indicator of a potential willingness to do more? Is it an acknowledgement that there are some stakeholders out there, as customers, as shareholders, as somebody to whom it matters, and that a company is responding to that interest? Now, accepting it can be disingenuous, and a company can be demonstrably faking their way through it. I think about Volkswagen several years ago when it came out that they were putting their thumb on the scale with their emissions tests in their diesel engines. But with that as preamble, could the case be made that greenwashing could be the first step in a journey towards true sustainable operations? And Erica, let me lob that one at you first.
Just for the sake of being concise, yes. You want more than that?
Yeah, a couple more sentences would be good.
I mean, yes, there's a case that can be made that it's a start. Everybody's on a journey. The highest quality companies, and by the way, I should add, I think that, corporate sustainability is simply the same as corporate excellence, right? And arguably at the highest level, we can define that as the relentless pursuit of material progress towards a more regenerative and inclusive global economy, all right? So if we start with the highest order of business, corporate sustainability, even the finest companies in the world are on a journey, right? And by the way, in terms of good and bad, I too don't, I try not to use those terms. There are relatively few things that are definitively good or bad. It's in the eye of the beholder, but in particular, it's in the eye of whether or not the actions of a company or a person, all right, are infringing on the rights of others, all right? That's when it's bad. So externalities, this is bad. But companies are all on the journey, best or not, and it does have to do also, it's not just supply, but it's demand. So as an example, BASF, a super high quality company, very thoughtful about sustainability, right? Issues of safety and supply chain and everything else. It's a chemical company, but you know what? If we want our bikes and our tires and our skis and everything else, our wines, you need chemicals, right? So some people decide to want to engage or not. So BASF, very fine company, right? Great examples, Ben & Jerry's. Such a great company, coming out of Unilever, Ben & Jerry's, their governance structure, everything. But face it, they make a product, if you misuse it, is not so good for your health, right? And then, of course, there's on the other side, Philip Morris. So probably the most hated company in the world. And again, a product designed to kill you. That said, they also have this tobacco plant, which is a highly unique product, this tobacco leaf, right? Very unique as a manufacturing facility. So companies are all over the map. The best ones and the worst ones are all on a journey. And it's the same when it comes to asset managers. Now, at Pathstone, we analyze asset managers all day and all night. This is what we do. So which of the managers are further along on their journey? Right? So there's the Wellingtons of the world that may not talk about it, but they're the ones that are voting their proxies and filing shareholder resolutions and such. And then there's the vanguards of the world. They like to talk about sustainability. Meanwhile, they haven't, been involved in a proxy or a shareholder resolution like ever practically. So, everybody's on a journey. And what I did special for you, Mark, is I tried to say, okay, where is everybody on this journey? So I made a little list for you, all right? So I think there are these companies that are in earnest, so earnest excellence. I think there's a bunch of those, and we like them. And the momentum of their improvements and their changes, that's an important investment factor, right? So you have the earnest excellence category. And then you have these inadvertently obtuse companies. They're not trying to be bad, but they're obtuse. They just don't know what they're doing in terms of, sustainability. Then you have sustainable hypocrisy, which are those companies that are inconsistent, or those managers. So on the one hand, they'll talk about fuel efficiency and what they're doing. On the other hand, they'll go lobby against, regulation in Washington. So that is in the category of sustainable hypocrisy. And then there's the flat out disingenuous, right? They know that they are not doing what they say they're going to do. And then there is the blatantly fraudulent. And as you mentioned with VW, that was a massive collapse of corporate governance, systemic to an organization that, you have to have a really crap culture for something like that to happen. So that list was special for you, Mark. And so the answer to your question, yes.
Thank you. So Sarah, I want to develop a couple of these ideas that Erica raised further. There's a challenge here. And of course, when we go down Erica's list there and we get closer to the fraudulent, I think it gets more and more challenging. But how do external stakeholders distinguish between a bad faith greenwashing effort and the early stages of a true sustainability campaign? And an example that I keeps coming up for me is as BP and the Deepwater Horizon disaster. And they were fairly deep into their Beyond Petroleum campaign at that point. They changed the logo from the BP shield to the sunburst, and they had all the warm and fuzzy advertising and corporate imaging and stuff like that. But when you go back and you deconstruct what happened with Deepwater Horizon, you realize that there was a culture of everything from bad safety procedures to disingenuity around environmental practices, and I could go on and on. But before that happened, for a lot of the public, very difficult to distinguish between real sustainable practices and a nice marketing campaign. So particularly in how you work with corporates, how do you approach that, and how would you advise people to be able to distinguish between one and the other?
Mm-hmm. That's such a great question and a really important example. We had just in 2008 done an analysis with HIP Investor of big oil companies in terms of their relative HIPness, human impact and profit sort of orientation. BP was at the top of the charts. And then the Deepwater Horizon happened. And that's because what was being used was a 1 hour interview with the investor relations people and an assessment of the publicly reported information the big oil companies produce. You just can't tell all of the things that are going on from that kind of cursory analysis, which is mostly what I think a lot of socially responsible screening is based on, simply because of the scale required to, there's thousands of companies, you've got to analyze them. There's a cost structure that is kind of anchored in a paradigm that does not think much about environmental and social issues. So you're competing for that sort of analysis that's meaningful against those who aren't spending the money to do that. So how would you ever be able to tell? I think that at the end of the day, there's only two ways that we can ever do that. One is by listening to the stakeholders inside the companies and in their supply chains, and giving them some avenue to flag it when there's something wrong in a way that the company can't squash. And what that means is having some kind of infrastructure in an industry or even in the global economy that would be like an ombudsperson, where employees or contractors in a company's supply chain would be able to send in some notification. There's something going on here and nobody's dealing with it. I'm not sure we're ever going to get to the kind of real-time, accurate and accountable information that is necessary to truly govern for sustainability at the scale these multinational companies or many nonprofits are operating at, let alone governments, in the absence of some sort of a function like that. And I do not know where that's going to happen from. I have seen a couple of examples of groups who've tried to do that and are kind of building parts of that. There are parts of this kind of around. And you can attain somewhat of that sort of function if the leadership of a corporation is intent upon acquiring that information and is authentically interested in hearing from people, because they really want to know, they really want to manage their ship in a way that is truly sustainable. So you can engineer this, I think, to some extent, if the leadership of the company genuinely want the information. But it's costly and it's sort of groundbreaking, and there's still lots of room inside the company's layers of operation and suppliers and factories and so on for managers to squelch the truth. So you have to have the leadership, and you can do it to some extent. But I think having some kind of independent function that becomes publicly known, and somehow every employee and contractor in the whole global supply chain knows about it and could send in messages, and it would be fielded in a way that is real time. And so if you've got lots of mentions of something happening, you know there's a hot spot and somebody needs to go check that out. I don't see how this is ever going to happen otherwise. And I think that Labor Voices was a 10-year effort led by Cole Gill to address this exact problem. And he had engineered a whole lot of very clever things, had a deal with a nation where there's a lot of sweatshop labor and the US Labor Department, I believe. And then that got scuttled by the prior administration. So he now is at Twitter helping them with their platform health. 10 years of effort trying to set that up, and he did a lot and learned a lot about what you need. So it can be, I think, done. It just needs the right ecosystem to support it.
I want to pick at that a little bit, because I think it raises an interesting question for all of us. Especially, I think, in the realm of wealth management and asset management, we've been hanging on to this idea that transparency and disclosure is the holy grail, that if only we could get good transparency and disclosure, all good things will follow. Mm-hmm. To the point where if you look at a lot of the data sets for capturing ESG data, it's heavily, heavily skewed towards good transparency equals good ESG score, because mm-hmm. one must naturally follow from the other. We can accept that sunshine may be the disinfectant, but I'm wondering, did we as an industry actually create the conditions for a fertile ground for greenwashing by saying, hey, put this information out into the world, and therefore it follows that we must be good? And mm-hmm. I'll put that out to all three of you. I'm interested what your reaction would be to the idea.
So again, this goes to the journey issue. Now, what we have to remember is that there is no single piece of data upon which you can base an investment decision. Although some people act as though there is. There's just not, right? It's a part of the mosaic. And so it is good that we are looking for transparency. It's very good, right? Investors need to know what they're buying, whether or not they have the same values as you. Transparency is very helpful, right? Data. The quality of the data is very problematic now, right? Because we don't yet have those standards for disclosure. Although thanks to the work we've done at the SASB and the GRI, we're getting better. That's a piece of, important infrastructure. With regard to which data we want, there's been a huge, overwhelming issue there. So we know that all the companies have just, they're so weary from doing hundreds of survey responses, asking for data in different formats. These reports, even the big companies, Coca-Cola, it could be 600 person hours to do one of these surveys, right? So the fatigue is there, and the quality and comparability, and the fact that a lot of this data is noise, that's problematic. So we have to focus on materiality. So what I would say is that, and this is, I think everybody knows George Seraphim at Harvard, his piece on, first evidence of materiality is most interesting to me in that it shows that companies that disclose non-material ESG data actually underperform those that don't even disclose, right? Because basically it can be a distraction. Here, look at this shiny thing, but here's where I'm really screwing you, society, right? So so this is a mixed bag, but we do need good data. We do need transparency to be able to make the decisions that are aligned with our view, but this is not, it's not the end all be all. It's what you do with the data. It's about getting decision useful data and relevant data. And so again, and then we ultimately, we want to be able to measure impact, right? We look for those changes. We are, I would say, when it comes to data quality and impact measurement, we're like toddlers, right? With coming into ESG integration, we're getting there, we're having progress. The discussions around stakeholder capitalism versus shareholder capitalism, very interesting. But again, we're still toddlers when it comes to good, useful data, comparability, the ability to make projections, and again, measuring impact.
So Sarah, I think Erica was primarily talking from the perspective of the consumers of that data. Could you maybe illuminate a little bit on the creators and the deliverers of that data and what the perspective looks like from the other side of the table?
Mm-hmm. Absolutely. Well, I think over the last 20 years, there's definitely been a lot learned about what the basic approach is and what the method for assessing material impacts on different stakeholders or different ecosystem issues. So what are the frameworks? How would that information get organized? How would you go about figuring out what is material to collect? That's pretty well understood now. That is different, though, from actually being able to do that. And it's different from being able to put into place a discipline within the organization around taking that information and integrating it into your strategic decision-making. There's a kind of across the board, slow and somewhat patchy upskilling happening, where I think, as you pointed out, Steve, not long ago, talking about ESG was kind of a thing serious investors didn't do. And today, clearly serious investors do that. But that does not mean that at every level of an organization, people have completely wrapped their heads around all of the places where they're having impact. And just as an example from the nonprofit sector, so we know organizations who are deeply devoted to missions of environmental sustainability, still in cases that I won't yet name, but the day is coming when I will name them, are the top environmental nonprofits in the world still have fossil fuels in their employee pension funds. And the employees are still investing in them. So clearly we have not educated folks enough to even illuminate that there's an incredible risk to their reputations and their fundamental ability to keep their doors open, because I think the day is now here when the public, if they learn this, would be deeply offended and have their trust fundamentally shaken to know this. And yet we still can't get the action because it's sort of inconvenient and it's a little bit too many dots to connect in the brains of the people who would make the decisions. And it's just a pain to deal with it. I mean, so even organizations that really genuinely mean it when they talk about sustainability are still not all getting the dots all connected and figuring out that overall picture of how you operationalize this. However, there is a movement I'm seeing in all of the major standards entities toward not only moving from, okay, what are your policies and your activities or even your outputs, but what is the effect on people and the environment from that, which is the impact thing. All of the major standards are moving to hold space for that question, which is a very much different question to answer. And there's a merging of some of the standards that were about measuring impact, such as SVI and the Impact Management Project, sort of getting people the tools to actually engage in understanding and measuring impact. That now what's happening is a further movement toward, okay, so you've got all that information. What are you doing with it? Are you doing anything with that information? Are you improving in an area that you learned you could improve in? Let's check that. So that's being evidenced by the SDG impact standards, which are about how, what's the framework for integrating impact into business and investment decision-making. That's a standard. And that's right now a way of auditing for whether folks are doing that well is getting written. And Social Value International is adding an 8th principle to their approach, which is called being responsive. So no longer will it just be left as an assumption that you're going to respond to the information. It's now actually codified into their standards, and they will be auditing for that as well. So this is just coming online, and it's because the bar is raising. And so I feel like we're entering this era when people are disgusted by greenwashing, but that disgust is exactly what's going to propel things to a better level where it'll actually work.
I have to add something on what you said regarding the biggest energy, efficiency and transformation organizations. So that's, again, it's outrageous. It's disgusting. And let's go further. Let's go to the biggest education endowments, in the world. It is disgusting that they're the ones who are supposed to be educating the future generation. They need to be very careful because their future donors are going to look at their endowments and see how they're managed, an investment in fossil fuels and human trafficking and guns, whatever. I have said, and I will say this again, I hope people are listening from Wharton, University of Pennsylvania, Columbia, Harvard. I will never give a dime to my former schools until they invest their endowments appropriately. And they need to know that their future donors are going to have nothing to do with them either. So we did a study once actually looking at the largest foundations in the world. And if you look at their investment policy statements, you will see almost nothing about sustainability in their IPSs as they invest. Again, disgusting. And then further than that, let's add the issue of diversity in here, okay? If you look at the trustees, all right, on the world's largest pension funds, endowments, foundations, on those trustee and those boards, you'll see for the most part 60-plus-year-old white men who have lots of experience on Wall Street. And again, I've seen a study on the composition of these boards. And those men, they know everything. They've been on Wall Street for 60 years. So, for them to come along and understand transparency and disclosure around sustainability, they don't need to do that. So, Sarah, when you started with the idea that it's complicated to make these changes, to move the funds and pensions and endowments, and it's not. It's actually not. It's a matter of these boards of directors and trustees looking at, holding the mirror up constructively, looking at the composition and taking control rather than abrogating their financial and stewardship responsibilities in a way that is completely unconscious. So net, I entirely agree, except with the fact that it's complicated. In this case, it's not. It just takes a lot of force of will to do it.
Right. I think what you're saying is it's simple, but it's not necessarily easy.
Yes.
I think that's right. Mark, if you don't mind, I'm going to jump in here because we've danced around impact, and I think it's important, perhaps, at least for some of the people who are listening in on this call, to say that all investments have impact, all companies have impact, all decisions about money have impact. And the question is whether you're paying attention to that or not, and consciously, directing your impact in some positive way, right? But Erica, you've mentioned materiality now a number of times, and I know you work with SASB, and that this is an important thing. And at the same time, we all are thinking about, and I think pretty much everybody on this call today thinks about impact and materiality on the world in a different way than you think about materiality in an investment portfolio. And I think it might be helpful to try to, separate that a little bit or unpack that, help us understand materiality from an investor perspective, materiality from a company perspective, and materiality from a perspective of somebody who wants to use their money to create a truly sustainable and regenerative future. To me, those are not the same thing. They might be, three overlapping Venn diagrams where there's some commonality, but not necessarily the same. So I'd love to hear what you have to say about that.
Definitely not the same thing, all right? I do use that word materiality from the standpoint of looking, again, every piece of the capital markets has their job, right? And with a company, and by the way, everyone talks about, Milton Friedman and the idea of shareholder primacy. And I actually believe in shareholder primacy, but I believe in it over the long term. Had Friedman put those two words in there, all right, we would be having a different discussion right now. Because arguably, if you want to do the best by your shareholders, then you need to do your best by other stakeholders, by your communities, by your employees, by your customers, right? So arguably, it's a system. It's not one or the other that you rank. And again, Friedman would agree with that. He left out those two words. And then if we go back to Adam Smith, he was a good guy, right? Meanwhile, the invisible hand is slapping everyone in the face. And that's because, again, with him, I think people didn't think about, okay, he's a good guy. Theory of moral sentiments coming before the wealth of nations, which here he forgot about externalities. That's not good, right? But in any case, I think that with materiality, when we are talking in the investment world, again, that's our piece, of capital markets and civil society. We're talking, and this is where SASB was founded, right? We were talking about materiality by sector, by company, and the relationship between the company's shareholders, right? So the investors and the company itself and the investors and who needs what. That's what we were talking about. All right. So financial materiality, meaning, according to the Supreme Court, that with this piece of information, it's a possibility that you would or would not have made a particular investment decision. This piece of data is material to your mosaic, right? It matters for the economic outcome. So SASB was intended to learn from the GRI, which has, a broad number of measures. It was arguably too much. So SASB comes down to the industry. That definition of materiality, is what I think is very tenable for the SEC to be thinking about when it comes to disclosure and an understanding of what companies, wealth managers and such are doing, all right? Company, investors, all right? When it comes to materiality for all stakeholders, it is different, okay? It is not part of a highly regulated industry like we are. And so this is where GRI is actually interesting and useful more broadly. And then when it comes to an individual, all right, an asset owner and our values, all right, some things that are material to one person are not necessarily material to another, right? So this is where we have to be more flexible. The word materiality has no legal context there, all right? So that's kind of the way it kind of works out. But materiality in the investment process is a piece of data that would affect an action of an investor and that a company is responsible for disclosure on. And that can be very narrow, and that's okay. Everyone has their piece of the puzzle in the capital markets to sort out. Is that helpful, Steve?
Yes, it is. Thank you very much, Erica. Sarah, you look at this a little bit more from an academic perspective, a little bit more from a company perspective, I think. And I'm just curious, do you have anything to add or perhaps disagree?
Well, I think the primacy of shareholders there are better scholars of Milton Friedman than I am, but I think there are those who would say that he was talking about long-term already. And evidently, even though that was part of his thinking, that has not panned out. So I do think that we do fundamentally need to rethink why it is that those who have the money are so much more important than everyone else. And that's not what you are saying, Erica. I'm not trying to put those words in your mouth. But I think in the big picture, shareholders are one stakeholder, but they are not the one that matters in all cases more than everyone else. And that is essentially how things are set up right now. And what we see is not just that corporations, have their lane, and so they should be left to optimize their lane. Their lane is taking over the entire planet. They are paving everything over, and it's all their lane now. And there's no lane for anyone else. So I feel like we in order to rectify that disequilibrium, which imperils everyone and everything. And I just left California where it was starting to get smoky because our fire season starts, really early in the spring now, to come to Minnesota where it is also now smoky because there's fires everywhere here too. There's got to be a just simple fundamental redesign that says anyone who is affected in a way that is important to their well-being as they see it is a stakeholder who matters and who has we've got to design accountability mechanisms to make that count when capital allocation decisions are being made. How we do that, I think, has to be about redefining materiality to incorporate stakeholders, not only shareholders, because I think it's got to be simple enough that it would actually be implemented properly. And two words can make a difference, as you say, Erica. We notice that a well-regulated militia is a nicely articulated qualifier to the Second Amendment, and yet, even though it's written in the Constitution, people have completely, abandoned that. So just a few words is not enough. I think we got to get it baked right into the design, right into the very term itself.
I just should say I agree with everything you've said. So we're on the same page. Shareholder primacy, it's missing a lot. And so we do have to, but here's where I'm very pragmatic. We do have to figure out to get where we want to, which is a redesign, right? It's a transformation of capitalism that takes into consideration all of those externalities, but to be pragmatic, to make change, which is what we've had over the last 10 years. We're moving towards stakeholder capitalism, but we have to, unfortunately, and this sometimes takes more time than we would like, but we have to know what the constructs of the system is like. So do we decide, do we evolve the system or do we explode the system and start fresh? I feel like we need to evolve the system. Because exploding it, we don't have enough time, frankly. There's this fierce urgency of now to act. We've already done so much damage. And by the way, I don't even like the word sustainability. We have to go beyond sustainability. We have to go to regenerative, right? Sustainability is not helping us. So, again, I totally agree with you. But if we know how the system works, right? We know how the SEC works. We know how the capital markets work. We know what investment banks, asset managers, wealth managers, we know what they're doing. We know what the interactions are. We understand the incentivization structures, right? If we know this and we put in place frameworks like the SDGs, we have a framework at Pathstone about impact measurement. We call it the access impact framework, right? How do you access, everything from healthcare to water to broadband to capital? We need to understand how the system works, and then we can start to change the pieces that have the most leverage. So starting by saying that, who matters is the people who have money, like that is like so wrong, right? But we have to think about the systemic causes, for instance, of, racial equity, right? We have to think about 400 years of white supremacy that brought us to the system we have. And then we have to invest in such a way that we correct what's happened. All right. And that's a systemic solution. Even though sometimes we want to talk about reparations, should we just go there? We need to go everywhere. You cannot solve complex problems with kind of linear kind of approaches, one thing at a time. They have to be solved with systems approaches, right? Parallel processing, lateral thinking. And so understanding the capital markets and the various pieces, you know, from the corporates to the asset owners, absolutely critical if we're going to get those kind of economic engines directed in a good way. You know, I'm sorry for that little tirade, Sarah, but we agree on all of this.
Yeah, no, I agree that we agree. I think that it's been interesting as SEC has taken up this question of what should it regulate, what should it require from corporations and large financial institutions around sustainability generally. They've opened a conversation about how wide or narrow should that be. There's even room in one's comments to assert that one should redefine materiality to expand beyond investor economic materiality. And so those debates are being had among those of us who are in the field trying to sort of do the versioning of the operating system upon which capitalism runs so that it can recognize that there's more that matters to people than just the dollars in their pocket. And the debate is, should we be pragmatic and should we let it be very narrow in scope and just focus on the easier to agree on stuff around climate impact and really carbon footprint even? Or should we go for what we know is necessary ultimately and sort of not wait and not do the incrementalist approach? And that's, I think, a very honest question for the field. And I've got colleagues who are on both sides of that, whom I respect greatly, who have put their careers on the line for years trying to, you know, get this right. And, you know, Social Value International's stance is that materiality needs to be as experienced by the stakeholders. And there are ways of gauging that, but I think, as you say, the whole edifice and all the incentive systems and all the accountability mechanisms that are in place right now rely on things being very certain, or at least a comfort level with how certain things are. That's hard to replicate in the social sphere, and thus could open the door for a lot of bullshit and a lot of manipulation. And we, you know, I don't know that we're mature enough as a whole field to quite get nail down where those risks truly are. So I'm of two minds about that, even myself, what SEC should do.
We're toddlers. But again, going back to the system, the idea of the SEC asking for information on non-material factors, you know, I would love it, but it's not going to happen. And we can't wait for the evolution of that to happen. Their job.
Well, I mean, there is this term double materiality that people now that's in the lexicon now. And I think SEC may not be the first to push that envelope, right? But the Chinese Securities and Exchange Commission has already mandated that corporations disclose their ESG stuff. As of 2019, or 2020, they gave them a pass to 2021 to get everybody online. But, you know, America tends to think we lead the world. This is so wrong. We are completely behind Europe and even Asia, it's suddenly looking like. And so I think other countries have a lot to teach and will be discovering a lot about what does and doesn't fly and work. And, you know, maybe it will be, you know, a benefit of the slowness to regulate in the United States, as I think is the intent of that stance, that we'll see what does and doesn't work. And then we'll finally pull something in that actually is fairly well designed, but it'll be late.
Well, it'll definitely be late. In Europe, I mean, I have huge respect for the leadership. I also love that Europe thinks kind of principles based in what they do.
Mm-hmm.
Yes. And I think that's so important. because it is ultimately about the principles, you know, rather than the rules per se.
Right.
So I think we have a lot to learn from that.
Yeah.
With
Amen.
regard to China, I mean, face it, it's kind of easy for them to mandate whatever it is they want to mandate. So that's a separate story. And with regard, again, back to the SEC, they do have a specific job to do. So if we want to change the mandate of the SEC, that would be interesting. That would take, I'm not going to wait. I'm not going to wait. And I got to tell you, the fact that SEC is going to look at RIAs and ask us, what are we doing when we say we're talking sustainability? And so just that fact, I don't think the SEC themselves know how to implement that rule, but I love that they're doing it, because back to the issue that this is about, greenwashing, right? Over 90% of new products, new strategies introduced over the last year as sustainable investment products, strategies, have not been newly created for the investment world, but they've been relabeled, right? Right. And so in terms of kind of genetic sustainability around the products that are being offered, products and services, you know, we got a long way to go. So the fact that the SEC is looking at that, I am delighted, like bring it.
Yeah,
you know?
Agreed.
I think we've got to also be mindful of what the motivation of the SEC is as well, because I think, you know, honoring the advertising rule and fairness and disclosure and, you know, truth and all that lovely, noble, I can't help but wonder, especially because of when the SEC started really asking these questions, whether some of that motivation was how do we put our thumb back in the dam on this one, because this ESG stuff is getting to be really problematic for us capitalists. And can we slow their roll a little bit through regulation? And so I think there's some good, and I think there's some dubious reasoning behind some of what's coming from our regulators.
I'm a little more, I don't know, I'm sure that there's a range of mindsets on that. And certainly there are corporations which are increasingly being called out for exactly this behavior of announcing they've got a wonderful voluntary policy, and then they're, you know, in the back channel, they're lobbying to weaken the disclosure rules and any kind of standards for performance. That, I think that is a ripe terrain now for our whole field to absolutely shine a light on and organize pressure to prevent that kind of malfeasance. I think that should be illegal, quite frankly. And I think it's far from illegal, and we as a field need to organize to ensure that that type of shenanigan is right out.
I see that we have some Q&A from the audience, pardon the pun, queuing up here. Let me throw a couple more questions at you guys, and then I want to tap into those as well. And so this question I'm going to throw at you in two parts. You know, what I'm hearing is I think we all agree that companies, you know, can and should do better when it comes to matters of environment and climate, diversity, equity, and inclusion, you know, access to healthcare, nutrition, et cetera, et cetera. Are there companies or are there entities, even thinking more broadly, where no amount of greening of their operations will ever look like anything but greenwashing, even if it's with the best of intent? And is that fair or unfair? Like, are there parts of the global economy where no matter how green you get, it's always going to kind of smack as disingenuous, dishonest?
I mean, I used Philip Morris as an example before. Their products, used as designed, will kill you. They do have bits of very interesting sustainability possibilities, right? So again, the tobacco plant as a manufacturing, machine. And also they do employ, millions of small share farmers and their livelihoods, right? That said, when you look at that company, people simply won't believe it because of everything they've done in the past. So the legacy is so, heinous that people just will never believe it. Now, here's the issue. And this is why some investors could argue, okay, I can buy this thing. right now with the move towards not smoking tobacco, right, towards basically injecting nicotine, and their system is called IQOS. The question is how, what is the speed and the magnitude of that company's transition, right, away from smoked tobacco. Some investors would say it can't be fast enough unless they stop making tobacco now. But you know what's going to happen to the share price if they do that, and the jobs of all those small share farmers. But basically that issue, I don't see how that company, can get around the fundamentals of what they do, right? If we think about, on the other hand, gun manufacturers, right? Most impact sustainable investors are going to want to be nowhere near this, which we understand. That said, what if we see kind of, technological advances where we can control, by fingerprints or however, the shots out of these guns? Like, is that okay? For plenty of people, it's never going to be okay, no matter what. For some people, that's okay. For some people, if you just can invest in the technologies that manage this, that's cool, but not the devices. But is that okay? Or is that kind of disingenuous, right? So to answer your question, I think that there are no kind of absolutes, because there's always a yes, but it depends. So that, that's how I feel about it. And again, I'll go back to that thought that it is also about demand. It's not just supply. Is there such a thing as sustainable consumption? Arguably, there's not, right? Anything we buy, you are consuming resources that the planet doesn't currently have. So I personally feel very proud of myself that I wear my t-shirts until they actually disappear. So I'm very, very proud of that. And I don't buy stuff unless I pause and say, do I really need this? Because there is no such thing. And I'll go further to say that if the emerging world moves to have the consumption patterns of the developed world, we are completely screwed as a race. So, sort of, Mark, to answer your question.
Right.
Mark, your question really, if you don't mind, your question, let me rephrase your question, because it really kind of comes down to the smell test, right? And I know there's a fair number of investment advisors, that work with registered investment advisors on the call today. And the beauty of working at the individual client level is you can determine what the clients really care about and what smells okay to them or not. And, and devise portfolios now that really reflect their values and achieve their goals in a way that's much more customizable than it was even a few years ago. I know we all know that, but I think it's worth making that statement to those who may be on this call who don't have that perspective at the kind of the individual or family office kind of level. But Sarah, maybe you wanted to jump in on this particular question, this smell test question. At least that's the way I think about it.
Well, I'll answer something that's maybe a little bit related to that, not directly answer it, which is that I do think we're getting better and better at enabling an asset owner who has awareness of what their values are. And by the way, that is a whole discovery process over a lifetime to even get clear on what you really care about. So those who do know what they are looking for can better and better get clearer information, because companies in all points in the supply chain are starting to have better systems to understand their own impacts. And that's slow and that's a huge undertaking globally, but it's also very exciting because it is gradually kind of happening. There are certainly places in the economy where you don't really see much activity on that front, and other places where you do, but it's moving in sort of that direction. So it's more possible to try to understand what you're holding and then align what you're holding with your values. What I also think, though, is we're starting to recognize that there's a limit to the power of the investor or the asset owner to shape the world. You know, there are right now corporations with great, you know, leadership, good systems in place, the right policies to, for example, eradicate human trafficking, but all of their peers rely on essentially human trafficked labor in some places. And if they just pull out, there's an ethical dilemma there for them and a business dilemma for them, because then they lose, they basically fail in their fiduciary requirement to perform because they basically have to shut down an area. And there's not right now a way out of this conundrum where the labor kind of across the board in that place with that skill set is kind of like a heavily human trafficking kind of situation. And all of the industries that are using that source are complicit in that. Even the ones that essentially have already stated and have all kinds of systems around trying to not be doing that. How are they going to solve that problem? They would have to basically organize some kind of collective action, possibly in partnership with Wall Street somehow, to permit them to correct that problem for the industry. And they'd have to get the buy-in of the investors who are all on the hook for financial profit making to somehow realize that this is a necessary detour and work together as an industry to actually fix it. I mean, we're entering into a new era when like that kind of collective action problem solving is kind of going to be the thing that will chase out some of the bad things that the world needs to fix. And it looks like a quasi-governmental thing. You know, maybe it is a governmental thing partly, or it's maybe industry consortia that all work together, but they'd have to work with investors to kind of free people up to not perform on financial terms for a little while. I don't know. I mean, like there's going to need to be some collective action solutioning that has a private sector cast to it that incorporates the investors and the corporations and other civil society actors. And we're just sort of starting to see illustrations of what this could look like. There's a foundation that I just ran across recently, which I'm very excited about, called the Changing Markets Foundation. And they're sort of shedding light, they're doing research and shedding light on and sort of embarrassing corporations into, getting their acts together. But it's a pretty adversarial stance. So there's going to be more of that kind of engagement and like pushing on companies that are already on some level, at least trying, because they're publishing stuff, So there's a lever there that if the company just stays quiet and tries to keep its head totally down, you don't have. So there's going to need to be some forcing of companies to disclose stuff when they want to hide, because they could get away with hiding for a long time if the government doesn't force them. And then there's going to be this kind of innovative public-private collective action thing that doesn't even have a name yet, as far as I know. And I'd be interested if anybody else, even in our audience, knows what that's called or has other examples of that.
So just a quickie on the collective action thing. I entirely agree. Just with regard to the fiduciary issue, as a fiduciary, there is not an issue legally as it relates to our kind of underperforming by virtue of not investing in companies that are, not addressing human trafficking. The issue is more being transparent. All right. So again, I'm going to keep going back to the Philip Morris because it's so obvious. There is no fiduciary breach for Philip Morris to announce that they are getting out of burning tobacco now, and the stock would tank. And there is not a fiduciary issue there by portfolio managers that own the stock or the company. There might be someone who wants to sue them. I'm sure there would. But the reality is, if they are doing what they think over the long term to transform the company is the right thing to do, and if they are being really transparent, tell the market, here's what we're doing, and if they're owned by asset managers and asset owners that have been informed about what they're doing, theoretically, the stock price would take the hit immediately, right? Even if it went to $1 or whatever. But that piece of not being able to do collective action, that's not the one that, as a fiduciary, I would worry about. Yes, the idea of collective action in an industry to stop human trafficking, you're right, it has to be everybody on board. So government in terms of, anti-corruption and companies and investors, you're absolutely right. But that particular issue with transparency and communication, there's a lot that we can manage and there's a lot that we can do.
Yeah, and I mean, I think that there's a need for more leadership and examples and storytelling about how this is done. There's also just the human toll. I mean, I still remember meeting a guy a dozen years ago who'd been the CFO of some public company, and he had PTSD from the reaction the investors in the room had given him when he missed earnings one quarter. Like it was scarring psychologically. The just like the viciousness that he had experienced. So I think there is, there's fiduciary behavior by the letter of the rules if your advisors are well informed about what those letters are and are brave about the lawsuit risk.
Yes,
and then there's just the psychological reality of human beings who have, for a host of reasons, are going to have a hard time making this kind of transition.
But you need to be strong, right? Everyone can't be Paul Pullman, but
right.
If a CEO is not strong, shouldn't be. I mean, honestly,
right. We all need to get a lot braver. I think all of us need to get braver.
This is about force of will, right? And so CEOs need to be strong.
Let me jump in here with a little bit of quick housekeeping. Then I have one more question. Heather, presumably you're listening. Let's make sure that we capture the Q&A as well as the chat. There's a lot of great stuff in there that I want to make sure when we all disconnect, we don't lose it. While I'm asking the next question, Steve, if you wouldn't mind having a quick look through the Q&A and the chat and pull out a couple of questions that we can pose to Sarah and Erica here to wrap up, that would be terrific. My next question is kind of a development of everything that we've talked to up to this point, and thinking about this at the systems level, that we can't just steep ourselves in purity tests, because we can all be happy and safe in our own little corners and change nothing. But if we're thinking at the global systems level, can we achieve a more sustainable and eventually regenerative economy and society if we don't bring the worst offenders along for the ride? The ones, so Erica, the last 2 or 3 categories from your list, basically. If we just say, these folks are irredeemable, forget about them, are we ever going to get there as a planet, or are we just going to burn to the ground? So I'm throwing that out to both of you.
I mean, don't you like feel like that's the debate in society broadly, outside of even corporate activity, right?
That's why
I feel like what I've learned in the last 20 years, among other things, is that I don't think everyone connects dots as easily as everyone who is already connecting dots thinks they do, right? I always was like, well, it's pretty clear that if this is happening, then these other things are going to happen. And so we ought to be accountable for that and design things so that will go in a different direction. And I think a lot of people are like, how on earth is this related to that? And you're crazy. You are irrational and crazy, and a crazy lady for like associating those things. Clearly you're, having a woman type meltdown of some kind, just like writing off the point, not at all understanding how these things connect. And I think that is, it turns out, a really sizable percentage of humanity that are not seeing those dots connected in the way that those who do see them connected thinks obvious, So I'm kind of interested in how do we fix that? And somebody in the Q&A asked something about marketing professionals. for years, I mean, I used to be very cynical about marketing, and I used to, when I started, I had to work hard to distinguish what we were doing away from marketing and fundraising, because nobody understood why would you measure your impact if not for marketing and fundraising purposes. And I'm like, well, what about just actually knowing what your impact is and trying to have that be better? That didn't compute for a lot of people. Today, though, I see that the communication and the marketing skill set is so crucial, to successfully attaining this vision of having a better impact and a more sustainable type of capitalism, or regenerative, ideally. And there's probably people in that space who do connect dots well, I think, or who, at least once they know what dots to connect, they'd be good at doing it in a way that the evaluation world is not. And by the way, evaluators, and I have had a hard time identifying myself as one, but probably many would see me as a part of that world. We tend to be very sort of humble, and we tend to be not that good at broadcasting how great things are, or what the certainty about where things are going is. And that's a problem. We need more marketing mojo, I think, to really get the word out. So I feel like connecting dots is a big issue. If you have more people who see the same set of dots and how they connect, I think more people would be trying to do things to make things better, and not just, throwing wrenches in the works.
Okay, what do you think? Systems level, bringing everybody along, even if there's greenwashing going on?
My aspiration is that companies that don't come along will be dead, right? By the way, I would say the same about boards of directors. I shouldn't say they'd be dead, but they should be acknowledged as dinosaurs. And so, again, that's my hope. And then between the idea of transparency, investors becoming stewards again, right? And then regulatory bodies. Between those, I just hope they end up frittering away and dying. And by the way, if you look at the history of the markets, short sellers make most of their money when stocks are going from 5 down to 0, right? Not when they're real companies. And so these days, I think of some of the, the stocks, I think they call them meme stocks or whatever. Like, why are you trading in stocks that should be at 0? It's just beyond me. So when it comes to the markets and we talk about bubbles, it's like all the SPACs and the meme stocks and all the crypto examples and, the non-tangible, tokens. And of course, every billionaire has a space program, whatever. But ultimately, I hope that value and quality and innovation, and growth come to the fore, and we will have companies that just go the way of history, kind of like the last administration. Sorry, I try not to get political. But.
So the normal functioning of markets should ultimately glean out the under and non-performance. Steve, what have you been able
to? Can it happen fast enough? I think the question with the markets, the question with this transition to stakeholder capitalism, is really kind of embodied in how fast can we get there, and can we do it without so much disruption, that the house burns down and we have to rebuild it. Because I agree with you, Eric. Something you said earlier about, we can't just let the house burn down and then we don't have time to rebuild it. We have to kind of remodel it as we go. And I know that's my metaphor, not yours. But it's a question of timing. Do we have enough time? What are the levers to increase the speed at which, all of this good stuff that we've been talking about today are embraced by all investors and by all companies and by all policymakers and by all nonprofits? How do we get there quickly?
The way we get there quickly is, unfortunately, through object lessons that are devastating, right? So every member of our Congress, should be, have their families experience the West on fire and a tornado in Brooklyn. And I don't mean to wish ill on people, but object lessons. Have people understand whatever your favorite animal is, there are thousands of species going extinct every year. We will be one of those species. My children are not watching this broadcast, but it's too late, to save the polar bears. We have so much built-in damage. The issue is whether or not our species would exist. The reality is the Earth doesn't give a rat's ass about human beings, right? So are we too late for that? I actually think we are. I apologize if I sound like a nihilist. All that said, maybe it can be okay for my grandchildren and everything else. So again, to get there faster, those object lessons are going to keep coming, right? And hopefully we can think about that. Second way to get there faster is truly an analysis of the world's boards of directors, all right? And, an understanding whether it's in the corporate sector, whether it's in, the investment sector, whether it's in the public arena. Let's look at the leadership, because sustainability and impact has to absolutely come from the top. And of course, there has to be a groundswell of demand, from the bottom. The issue is, will those two come together fast enough? I'm not sure.
Yeah, I mean, I think it will be fast enough for those who are lucky enough to survive. And it will be too slow for those who aren't. And that's the tragic, horrifying reality. And we have to try to keep ourselves motivated and take care of ourselves. And I think we need to act with more urgency than we have. And we need to be more political. We need to call our senators, because pressure actually does work on public policymakers. There is a new stakeholder capitalism caucus that Chrissy Houlihan and others have organized in the US House of Representatives, and in the Senate there will be one, I think. That's brand new, and it's to help get them up to speed on these issues. So I think supporting that, encouraging across party lines participation in these things is essential. We've got to stop being, in team blue and team red when it comes to fixing this problem, because it's everyone and everything. And that's distasteful for many of us, I think, but nonetheless, we have to do that. So
we need to accept that the rats in their asses are going to outlive us if we don't change our behavior.
Yeah, and the bugs. We'll all be eating bugs, which is good. We should all start eating.
Cricket flour is where it's at, yeah.
Or the bugs will be eating us. I'm going to give Heather a heart attack here and say that we're going to run a few minutes long here, because I don't want to lose where we're going. So I just saw one question pop up in the Q&A, which I want to answer, and then I think Steve has got a couple that he's pulled out. So the question was, Erica, can you repeat the categories you placed on at the beginning of the call? Let me say this. We are going to do a couple of blog posts based on everything that was discussed here that will be on Future Capital's website, as well as the social media feeds. So yes, we're going to capture that. We will make it available there. So Steve, what do you have for us?
Well, I actually am going to say I don't have anything that I feel is so important that we go over time here today, Mark. Okay. In respect to the time and the attention of all the people who tuned in, and in particular to our guest speakers. Yes, I can stay for a few extra minutes, but I think that is not what I want to do today. But there is, as you said, other opportunities, and as Future Capital, we want to keep this conversation going. So I want to invite anybody who is on the call, and for that matter, I know that there's at least 50 people who signed up for this call who couldn't join us today, who want the recording, and so there'll be more people watching this as time goes on. And I want to encourage those people, even though you're not with us today, as you're listening, you're going to hear me, issue this invitation. I want you to reach out to us with your questions, with your comments, with your thoughts on the issues that we've discussed today. And in particular, I think what it really comes down to is, greenwashing as good or bad. I think we've essentially established that it's not terrible, that it can be bad. And Erica has done a nice job of categorizing, kind of the goodness and the badness, or maybe the spectrum of good to bad. But it's helping us as a society be more conscious and behave better. And that higher level of consciousness and that better behavior, hopefully, in my mind, comes fast enough that we all do survive and we end up, with a truly regenerative future that is good for everybody. Now, having said that, I know we've got to wrap up here. I just wanted, since I have the floor, thank you so much, Erica. Thank you, Sarah, for joining us. Mark, thank you for leading this. I'll toss it back to you, Mark, or maybe to Heather at this point.
Yeah, so let me just wrap by saying Sarah has shared a couple of good resources in the chat as well. We're going to capture all of that. That will be put out through social and on the blog and stuff, because we don't want to lose any of what has been shared here today. I want to encourage everybody who's listening now, and as we stuff this message in a bottle and send it in the future, to get connected with us. The Future Capital Initiative is as much building a community as it is the activities that we're doing here. So please get engaged with us. Suggest topics, send us resources that you're aware of, ask us questions, provide us answers. That's really what this is about. We're trying to bring the world a little bit closer together to tackle some of these big challenges. So with that, I want to pass it back to Heather for a couple housekeeping and other comments, and then we will put a pin in it for today.
Fantastic. Thank you so much, Mark and Steve and Erica and Sarah. Thank you so much for joining. It was such a pleasure to have you speak with our community today. These calls take place every second Wednesday of the month, and we flip-flop between a conversation, a panel, and a workshop. So next month's workshop, August 11th at 10:30 Eastern Standard Time, is the You're Here for a Reason workshop. And that is with Lawrence Ford, our founder and chairman here. And really his workshop was birthed. I'm really super excited to roll this out next month to our community. The workshop was really birthed from Lawrence's book, Secrets of the Seasons. And from the thousands of individuals and organizations he's really helped unlock their wisdom by remembering their reason for being here. It's an experiential workshop, and it has been choreographed with foundational questions and breakouts, moving individuals in and out of conversation with the goal of sparking conversations to help attendees explore their past, to clarify their present, and to imagine a better, thrivable future for them and the world. I put in chat the link to that. And I'm also going to put in chat, like Steve said and Mark said, this isn't the end of the conversation. It's just the beginning. So I want to tell you how you can reach us. And I put, you can reach our YouTube videos for past recordings. But in honor of our tradition, we like to end our calls with a moment of silence. And we'll leave it open for a little bit. So as we close, I'm gonna close my eyes and really be present with each other and kind of move into your day and take us with you. We had some amazing conversation with you, and feel free to drop off when the need arises to drop off. Thank you again for joining, and blessings and love to all of you. Thank you so much.
Thank you.
Take care, everyone.